Limitations of market approach and various methods of valuation thereunder. Meaning what? Meaning, market approach of valuation is not free from flaws. There are definite risks involved. There are definite limitations involved in use of market approach for the purpose of valuation. For example, if you are using the level 1 input, that means you are doing valuation of a company which is listed on a stock exchange. Index 113 prescribes that you must use the quoted price of that company for the purpose of valuation. But if I tell you so many companies whose valuations on the stock markets have varied very significantly, you will realize as to what a big limitation it is as far as using the quoted price as the basis for the purpose of valuation of a company. For example, Reliance Infra is a company which at one point in time was ruling at 2500 on the stock market, and today it is less than 40 rupees. Reliance Capital, this company once upon a time was trading at a price of 2924. Today this share is available at less than 50. Reliance Power once upon a time was ruling at 430. Today it is ruling at around 4 rupees. Reliance Communication once upon a time was ruling at 800 rupees, and today it is about 2-3 rupees. So there's a huge limitation in case of using market approach for the purpose of valuation. Why go very far? Why go very far? Recently we saw the public IPO or IPO of a company called Paytm, and I'm sure some of you would remember that this company came out with the public issue where the issue price was 2,150, and today this share in almost about less than a year is trading only at 610 rupees. So today's price of Paytm is 610 rupees. So number one, please remember, even though Index 113 prescribes the quoted price as the level 1 input for the purpose of valuation, as a valuation professional, you and I have to take it with a pinch of salt. That means what? That means we cannot and we should not simply 100% depend on the quoted price. We should still do the analysis of the company and check as to whether this price is supported by the discounted cash flow or not. So that is limitation number one as far as the level level 1 is concerned. Now, as regards to the level input level 2, what are the limitations? The biggest limitation in case of market approach is it is only in theory that you can find a comparable company or you can find a comparable transaction. In practice, it is next to impossible to find a company which is exactly like that of yours. It is absolutely impossible to find a transaction which is exactly of the type of the kind that you're trying to value. And not only this, so number one, there are no comparable such exactly comparable companies, no comparable transactions available in the real life. Number two, even if some comparable transactions are happening or in the companies or in the some transactions, it is again a challenge that you may not be aware of those transactions or those companies which are taking place in some part of the globe. And fourthly, what will also happen is, even if you are aware that such and such thing is happening, say for example, you have this Elon Musk acquiring Twitter as a company. Now this transaction is done, so it is in your knowledge, but you may not have all the informations or the underpinnings or the inside information of this the internal transaction information of this transaction available with you. So these, friends, are the limitations of the market approach of valuation. And therefore, remember, cash is always the king. And that means what? Whenever you're doing any valuation, remember, let your valuation always be backed by the discounted cash flow, because discounted cash flow, remember, is the most reliable, dependable method of valuation among all the valuations that approaches or the methods that we have. What we only need to do is to take two care number one, make sure that the cash flow projections are as realistic as possible, and number two, use the cost of capital which is as precise and as accurate, incorporating the risk and return trade-off of the client. And if you do this, you would be able to arrive at a very fair, really a fair value of the company. Now, does it make sense, sir? Any question on this?
Yes, yes, only last para you told.
Please.
Once again, repeat it. Cost of capital.
Yes, okay.